Okay, welcome back to the program. What we have in our news box, Nigeria Aviation Handling Company, NACO, has informed the stock exchange and the shareholders community that Lufthansa Commercial Holding has transferred all its 97.453 ordinary shares of NACO PLC, of course, which is listed on the stock exchange, to a new investor. That's about 6% of the entire shares of NACO PLC. That's now been transferred from Lufthansa Commercial Holding to Goldsmart Nigeria Limited. So Goldsmart Nigeria Limited, which is an indigenous company, is now owing or become a holder of 26.95% of the issued and paid up capital of NACO. That is the aviation handling company, the one listed on the stock exchange. That's number one. Number two, C&I Leasing PLC also announcing the conversion or the intention by Abraj, which is a private equity investment firm based in Dubai, that is converting its Areas Africa funds of $10 million in C&I Leasing PLC from loan to equity. That's the news. So that's the $10 million unsecured coupon redeemable or convertible loan is now being converted from a loan stock to equity. According to C&I Leasing, the development is positive for their business, allowing them to have more favorable capital base doing business in the leasing industry. Of course, a diversified general business. But of course, they're also doing, C&I Leasing is also carrying out what you call a share reconstruction. What the company says is doing is to convert or squeeze 4 existing shares into 1 new share for shareholders, what you call a share reconstruction. So for every 4 shares you got, you're going to get 1 new shares. And that, of course, that 1 share is expected to be bigger. And that's what share reconstruction is all about. All the details are out there already. $10 million of average private equity fund in C&I Leasing is now being converted from loan stock to equity, into shares. That's what it means. We'll talk about mutual funds, markets. We'll talk about managed funds. Is one of the ways you can invest in various asset classes, build a portfolio, whether you're doing FX, managed funds, or you're doing basically equities, or a hybrid of both debt and equity. So you can all come in different shapes and sizes, and quite a number of them. Yes, last year was a bit very hot weather for the Nigerian stocks. So what's the state of the mutual funds? Let's get a view of someone who's in that sector, who understands what it means to have a managed fund. Jolomi Odongaro is associate and team lead for research at AfroInvest. Is live to us from the Nigerian Stock Exchange, our studios downtown. Jolomi, good morning. It's good to have you on the program.
Good morning, Bosun.
Thank you. So, give us a bit of a highlight of the mutual funds market last year, as we saw a very active debt market, but a very negative equity side.
Yeah. So, I mean, in Nigeria, we have quite an array of choices when it comes to mutual funds. On the mutual funds front, you have equity mutual funds, you have bond mutual funds, you have mutual funds that that invest in money market instruments, and like you said, you also have hybrid funds, balanced funds that invest across asset classes. On the equity side, the performances of the mutual funds is actually not bad, outperforming the market in quite a few cases. I mean, this is not unsurprising given that mutual funds are actively traded. So the fund manager has the leeway to go ahead and invest across to fundamentals, or invest based on market trends, or any speculative opportunities he sees in the market. And so what you find is that most of the equities mutual funds in the market generally outperformed the markets, the stock exchange for the year. But obviously still negative. I mean, the general bearish sentiment of the market still weighed heavily on returns in the year. Yeah. On the money market side, what you find is that the average yield that most of them were offering was about 12 to 13%, which is fair for mutual funds. I mean, it's for a money market mutual fund or a debt mutual fund, the average investor typically doesn't have the access to the market to go and invest in a lot of securities that typically go from finance houses that arrange these deals to other finance houses to invest. I mean, a lot of investors also don't have the minimum level of subscription for a lot of these deals. So that's why a money market mutual fund or a debt mutual fund is quite a good investment vehicle for investors to look at. And the returns are also quite good. I mean, pulling together all those funds to invest means that you have better pricing power as opposed to you, an individual, going to a bank or not even having enough to invest in certain instruments.
Okay, so the advice is to go for what you called a mixed portfolio, as it were, where maybe a little bit of FX, maybe a little bit of money market, a bit of debt, a bit of equities. If I did that in 2018, I would have come with a bit of some double-digit index return.
I mean, if it depends. A lot of investors, you have to weigh your risk profile, to be honest. If you have a low risk profile, then you might want to stick more with the bond mutual funds or mutual funds that invest strictly in money market instruments where the return is basically fixed. But if you have a larger risk appetite, when market is bullish, equity mutual funds will do well because, again, like I said, it's actively managed. So managers take advantage of opportunities that you as an individual investor cannot always be in the market to take advantage of. Or maybe at some point there's information asymmetry where you don't have the information the manager has and you can't make those decisions in the sort of time frame the manager will. So, I mean, at the end of the day, the benefits of a mutual fund far away individual investment in our opinion.